Now, $5,000 into this brand new ETF I just bought buys me just under 89 shares of this ultra high yield ETF. Now, with these 89 shares based off of the most recent weekly payouts, I'm looking at $33.44 per week, which is a $5,000 investment. Mind you, this is $133 extra per month into my portfolio, again, just based off of their most recent weekly payouts. So in this video, I'm going to share with you guys why I decided to make this big jump into this ETF that I've been talking about for a while now and decided to add a ton more of it into my portfolio, making my weekly income and monthly income jump up quite a bit with a relatively small amount of money invested. This weekly payer is one of my favorites across the entire market as of right now when it comes to weekly paying ETFs. So I'm going to share with you guys what it is, what it has to offer, and then lastly, why I decided to go in and buy a lot more of it and my plans moving forward. So if this sort of thing interests you at all, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So some of you guys might already know exactly which ETF I'm talking about, which ETF I'm referring to, that I have been buying a little bit as of recently and now a lot more of, and also plan on buying more in the future. I'm talking about MAGY, M-A-G-Y, or the Roundhill Magnificent 7 Cover Call ETF. Now before I go into exactly why I decided to purchase a lot more of this one and why I plan on purchasing more in the future, let's go over this ETF, explain what it is, how it works, to give you guys more context. So first of all, it says the overview for MAGY, the Roundhill Magnificent 7 Cover Call ETF. MAGY implements a cover call strategy on the Magnificent 7 stocks. The fund offers exposure to the MAG 7, subject to a cap while providing the potential for current income. MAGY is an actively managed ETF. It then says why MAGY. For one, weekly distributions, which are always a bonus. Just because an ETF pays out weekly versus monthly versus quarterly doesn't necessarily mean that it's a better ETF, but depending on what your strategy is, depending on what you're looking to use, whatever investment vehicle you're talking about, weekly distributions can definitely be a bonus. It says MAGY seeks to generate weekly income through a cover call strategy on the Roundhill Magnificent 7 ETF. Precise exposure, MAGY offers precise exposure to the Magnificent 7, subject to a weekly cap. And lastly, actively managed, MAGY implements a cover call strategy, saving investors the time and expense of trading options themselves. Now, if you guys aren't very versed on what the Magnificent 7 is, it's Tesla, number one, Nvidia, Meta, Amazon, then Alphabet, we have Microsoft, and lastly, Apple. Now in my portfolio as of right now, I do already have a ton of Apple exposure. I currently hold over 1,000 shares of Apple, and I've held onto those shares for a long time now. But when it comes to names like Microsoft, Alphabet, Amazon, some of these other names in the Mag 7, my portfolio is lacking exposure to say the least. Now, the main reason I probably wouldn't buy many of these names on their own moving forward is just because in my portfolio, I'm looking for income generating ETFs and or stocks. It doesn't need to be super high yield, but I do want a decent amount of income right off the bat. But the cool thing is with ETFs like MAGY, which offer exposure to the Mag 7, but through a high income strategy, I now can have some Mag 7 exposure in my portfolio, which means that if these names do very well, my portfolio is going to feel it, and the opposite is also true. Now, some more information about this ETF before I go a little bit deeper into why I decided to purchase a lot more of it and my plans moving forward. MAGY's performance has been very good. It's up around 18+% as far as total return goes. And the cool thing is if you look at the performance of MAGY just as far as price return goes, this is not including any of those juicy distributions. This ETF is also up substantially, of course, because the underlying have done pretty well over this time frame. Now getting into the fun part, MAGY does offer around a 35-36% distribution rate. This is very, very high, one of the highest distribution rates across my entire portfolio. Now generally speaking, I wouldn't consider myself an ultra high yield investor. I buy into and own names in my portfolio that offer as low of a yield that let's say Apple offers and as high of a yield as something like Coney. But generally speaking, my portfolio isn't on the ultra high yield side of things. I think the entire portfolio is probably around a 6 or 7% weighted yield. So by adding a 35% yielding ETF to my portfolio, especially almost 100 shares of it, is definitely shifting things around in my portfolio a little bit. And no, I will never make my entire portfolio full of names like this one that offer, say, a 20+% yield. But just using names like this as small satellite positions to really juice up my income is something I've been more and more interested in doing. Now, like I mentioned, Maggie does pay out every single week, which is also something I am seeking because most of my positions in my portfolio pay out quarterly or even monthly. So it is sort of fun and actually sort of useful to get more income into the portfolio on a more consistent basis, because then in the future, I can use that income to pay for things like expenses or bills or whatever else the case might be. But until then, I have more income in the portfolio to reinvest even quicker into more stocks and more ETFs. Now, looking at the distributions from Maggie over the past 12 months so far, we don't have that much data to go off of, but so far they've been very, very good. On the lower end of things, we see around 27.5 cents per week this is, which is still a massive, massive amount of yield, in my opinion. And then most recently, ever since the end of June, we've seen around 38 cents pretty consistently, which if this ETF was able to pay out 38 cents per week per share ongoingly, I mean, that would be a massive, massive cash printing machine. Now, a few things to worry about when it comes to any of these ultra high yielders. In my opinion, there's two massive things I personally worry about. The number one thing is going to be, are the distributions going to get smaller and smaller over time to where they're dismal compared to where they were historically? Now, this is really going to depend on the implied volatility inside the underlying positions in an ETF like this, which the Mag 7 have always remained pretty volatile, so hopefully there's always some juice to squeeze when it comes to option premium. But the other main thing I worry about is, of course, decay, price decay, NAV decay, whatever you want to call it. Buying into an ETF like this one at, say, $56 per share, more or less, and seeing it in the future go down to 55, 54, 40, 30, 20, etc., etc. Now, the two biggest risks that I just talked about are going to have a lot to do, like I said, with the underlying, which in this case is the Magnificent 7, which I'm fairly bullish on when it comes to the long-term outlook. But even with all that being said, I would never make an ETF like this one a larger portion of my overall portfolio. I think with ultra high yielders like this, I would never make it larger than 5 or 10% of my overall portfolio, just because of my personal goals, my strategy, my objectives, and my risk tolerance. But all in all, I'm super excited that Maggie is now a larger portion of my portfolio than it was up until recently, and I am going to keep buying more and more shares of this ETF in up and coming days. So now that I shared with you guys one of my favorite weekly paying ETFs as of right now, Maggie, the Magnificent 7 cover call ETF brought to us by Roundtail, I want to hear from you guys down below when it comes to my most recent move. Do you think it's a good idea to add some Maggie exposure to my portfolio for my specific goals and strategy, or what other weekly paying ETFs should I look into next? Let me know in the comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.